Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedgen Lee with an Ethereum update. I wanted to share with you a bit of a longer term perspective and maybe tie that into the shorter term charts that I have been presenting now for a few weeks. This is a semi-logarithmic chart. Why is it semi-logarithmic? Technically, a semi-log is not a log chart. Semi-log is where the price axis is in a log tabulation, but the time axis, the x-axis, is still kept linear. For that reason, it's a semi-log. A real log has log tabulation for both the x and the y-axis, or that can be at times called log-log. For charting, you rarely ever would use a log-log assessment because, so anyways, here we have a pattern assessment that should really stand out very clearly. And that is called a head and shoulders top. If we take this and label the left shoulder as an LS, and also label the right shoulder and then the head component for the HNS top, you get the left shoulder, head, and the right shoulder. If we look at the minimum measurement of price travel for this to be measured from the neckline to the peak of the head formation, we can get an approximation of price declining towards this region. To this cluster of a little bit of support. If that is correct, it hasn't reached there yet. It has reached only to this smaller zone of support, which is why the primary count had been showing this to be going in a declining mode to the sub 40s like this to meet the minimum region of that decline, which is to this support zone. The alternate is saying at the same time, okay, maybe this is good enough. Percentage-wise, the decline has been pretty severe as it is anyways. And after all, this is a semi-log chart. Thereby, the alternate is saying, well, maybe we have 1, 2, and we're going to get a 3. Something like this. Well, you might say, well, great, thanks for nothing. It'll go up or it'll go down. Thanks, Hedgen. I think the differentiation is what I call primary and what I call alternate. When I say primary, I would say 70% likely that we get the primary trend down to sub 40s, sub 50s, have a minimum travel to approximately 54.26, but they don't call it a minimum for nothing. It's called a minimum because it is most usually exceeded. That's why I'm calling for sub 50s. However, as an analyst, you cannot be inflexible. You cannot be myopic and buried into a single pathway on a projection, because that'll bring your account to zero. If you're not ready to turn on the dime, to change on the dime, your primary calls to the top alternate or vice versa again. To an outsider, it may look very wishy-washy, changing this, that, and that back and forth. To an analyst, it's the best thing one can do. And those changes are made based on new price data that is being collected every day. And since price is the most immediate and direct reflection of sentiment, the capriciousness of the sentiment is also reflected in the price actions as well. Thereby, using Elliott waves, which is governed by Fibonacci ratio, which is the same thing really for the governing of price actions, enables the combination of patterns, just like I have done already, to be able to identify most probable, not the most exact, not the most precise, because this is not based on precision, but based on probabilities, probable outcomes. One can identify, an analyst can identify the primary count, in my case, is lower lows to sub 50s, and the alternate count, not to be blinded by this only, but to keep an open mind and awareness to the fact that if we do get an impulse starting, I think the potential of changing from the primary to the alternate is highly probable. I hope you found this to be helpful. Have a great day.